things real estate, money matters. All things real estate, money matters. Hi, welcome to our channel where we talk all things real estate and money matters. If you are new to our channel, welcome. And if you are a returning viewer, welcome back and thanks so much for your support. Now, in case you're wondering who I am, I'm Latanya Knox. I'm CEO of Fort Knox Property Management and Fort Knox Realty. Have over 20 years of real estate industry knowledge and experience in working with investors and investing. Currently, we are covering Real Estate Investing 101 for Beginners. This is Module 3 of many series to come. Now, if you've missed Module 1 and 2, please go back and view them so that way we can kind of get you all the way up to speed to where we're at right now. All right, so with that being said, the first thing that's very important for a new investor, and actually even an advanced investor, anyone that is interested in investing, is very important that you understand what your investment strategy is. Okay? As I said before, I deal with a lot of investors, and most of them, they're interested in investing, but they have no idea what their investment strategy is. So we're going to go through this so that way you can figure out which one is best for you. Okay? So the very first section that we're covering is the buy and hold. Buy and hold is when you have recurring passive income. All right, and you typically hold it for a long term. Now, you also have what we call fix and flip. Fix and flips is basically where you resell quickly for a quick return on your investment. Currently today, we're going to explore and dig deeper into the buy and hold strategy. Just so that we can make sure that everyone is clear on exactly what the buy and hold strategy is. It's basically where you're going to generate monthly rental income, whether you're getting the income from a rental property, which has a long-term tenant in it that's typically there from 12 months or more, whether it's a short-term rental, or if it's Airbnb. No matter which type of buy and hold strategy you're utilizing, for the most part, it's to generate a monthly rental income. On top of that, investors typically hold for 5 years or more when you're exercising the buy and hold strategy. And then as far as refinancing or selling, you usually will look into doing that when the time is right, or there's possibly other opportunities for you to explore and capitalize on. Okay. The typical buy and hold strategy investment types are long-term rentals, which is where you have a tenant for 12 months or more. You have the short-term rentals, or they call them corporate executive rentals, Airbnb, and new construction. We're going to cover new construction because module 1 and 2 went into the long-term rentals, the short-term rentals, and the Airbnb. So again, if you're interested in learning more information on those strategies, I encourage you to view those videos as well. New construction phase 1 investing. I know you're wondering exactly what that is. So that's in the very beginning of the build out stage in new construction, where the builder just broke ground, has not actually started building anything yet, but they may have, sometimes they have a model up and then a lot of times they don't. But during this time, they pre-sale. This is also the time that the builder needs to keep building. And to keep building, they have early sales in the process where you're able to get that introductory pricing for actually going under contract early. Okay. Now, the reason that the builder does this is because they want a few homes under contract in the beginning. This is also to encourage new buyers to come and put it under contract, but also understand that in the beginning, phase 1 is typically when you're going to get it for the least amount of money, because the builder actually has a schedule, and their schedule is set to increase the value of the homes as they continue to roll out new homes or new phases, right? And they usually, I think, have 4 phases. All right. So the great thing about when you're investing in phase one is that you get the first pick for the location. So you're able to see exactly how the community will be built out so that you can strategize and get a very good location for your rental property. The other thing that's great is you get to invest in a new community because that is probably more than likely in an emerging market that will increase your appreciation rate very quickly so that you're able to build equity as they continue to build out the subdivision. Now, builders typically build in very good areas with good schools. Let's talk about the benefits of new construction phase one investing. It's very important to recognize that when I say phase one is where you will be able to benefit the most and actually get the largest return on your investment. Now, of course, if you were to buy in phase two, you'll get it'll cost you more than what phase one would have been, but you typically will pay less than phase three or four, right? Assuming that the market does not crash or the builder stops building. But for the most part, when I'm speaking of new construction, let's just focus on phase one. Groundbreaking, when new construction is out there, you check it out, you see it, jump on it. Okay. Now, the great thing about that is that you're able to get reoccurring rental income, right? Where you have money coming in every single month. The other thing is you have the long-term appreciation. With new construction, you actually build, it appreciates pretty fast and you build equity fast. And that's simply because as they build out each phase, it gets more and more expensive, which means that your home goes up and up and up in value, right? So the great thing is that you're able to recognize that equity very early on versus if you were to buy the typical resale home. The other thing is obviously it's the same as resale. Tax benefits are pretty much the same. You know, if you have any type of repairs, if you have property management fees, all of those things you're able to write off. I'm not a CPA. I recommend that you talk to your tax preparer to find out all the benefits that are available to you based on your rental property. Now, the other thing is it hedges against inflation, right? And that's because, like I said, the rental market, buyers, excuse me, not buyers, renters are always looking for a place to live. In addition to that, typically rents do not go down. Rents continue to go up. And right now, the market is very hot, is really good. A lot of buyers cannot afford to purchase a home. So since they're not able to purchase a home, they'll go ahead and rent. Okay. Some other benefits of new construction investing is the location. Um, as I said before, it's often in a very good location, a great neighborhood, a up and coming, a trending neighborhood. Now, and the other thing is people like living in new homes, right? So that means you typically get a higher quality of tenants. You have a much bigger pool of tenants to choose from, which makes you which puts you in a position so that you can pick the cream of the crop of the tenants that apply for your rental. Okay. Now, the other thing is you get the extended warranties. Everything is new appliances. It's very low to be really no maintenance and repairs because usually everything is brand new. If it breaks down, it's still under warranty. So you don't have any real costs when it comes to maintenance and repairs. The other thing is you have out here, there's a lot of build to rent builders that basically it's also builders for investors, right? They build properties that are tenant proof. And so instead of putting wood floors in, they'll put those vinyl the luxury vinyl floors in, right? When they're putting different type of finishes in, they'll do finishes that's more for your rental tenants versus if it was a homeowner trying to upscale and do more luxury, right? Which in turns keep your costs down, but also makes the property more tenant proof, where you don't have to worry about, let's say, for instance, where you have that big, thick, plush, beautiful carpet in there, and then the tenant spills red Kool-Aid or something in it, right? Instead of putting an expensive carpet in there or a plush one, they'll use a more less expensive builder type grade. All right. Now, let's talk a little bit about the risks, okay? Because with any type of investment, there are always risks. With the new construction rental, some of the risks that you have is longer commutes for renters. And what I mean by that is that a lot of time, the up and coming areas are further away from the city because the cities are already so densely populated that developers have nowhere to build. So with that being said, they have to kind of go out. So they go further out, which means that the commute for your renters are longer. Now, as we know, due to the pandemic, a lot of people have the ability to work from home, and a lot of companies just finally just made that automatic policy of theirs where they allow their employees to work from home. So that's awesome because then it doesn't even matter where they're located, right? So the next thing is new construction typically is more expensive to purchase than if you were to purchase a resale property, right? And that's because you're getting a new constructed property, which means that you're typically paying retail price. But one of the things that you got to kind of keep in mind is your trade-offs, right? Because money is time. And if you have to do repairs, expensive repairs on a resale property, it can eventually all cost and kind of catch up. The great thing about new construction is this peace of mind. But do understand that, you have to pay to reduce, some of the costs related to repairs and maintenance, but you're able to get a lot more of your time back because you don't get a lot of call-ins, right? The other thing that's kind of a risk and a disadvantage is that there's a lack of history. It's very difficult for you to be able to run the numbers to see if it's profitable because most homes are resale rentals, and you're not able to exactly gauge where that rental income might fall in. It's higher because you got a newer property, but it's kind of hard to figure out, okay, what exactly will the taxes be? Because your tax the taxes for your investment property will not be the same as the tax that's currently sitting on the property, which was based on the builder and the build out, right? So you have no idea what it's going to come in at. Okay, but you can do a good guesstimate. So to me, that's not a real risk, but you just kind of want to maybe get with a real estate agent so that someone you can get an expert or professional to help you to get a better idea of what those numbers are likely to come in at, right? The other thing is there's sometimes a waiting game because with new construction, like I was saying, when you're buying in phase one, that's usually your pre-sale phase, meaning that there is nothing up. There's actually nothing but dirt. Okay? So because it's nothing there but dirt, you already know that you're going to have to wait until they build it out. Now, that typically can be anywhere. Some builders can build in 4 months, but I'm going to tell you, it can be 4 months, and I've seen it go as long as a year. Okay. And mainly because they had issues with getting supplies. But typically, a builder can build out between 4 months and 7 months. And I would say expect 7 months would be your norm. Okay. Now, the other thing is just like with any type of rental, short-term rental, Airbnb, you can have vacancy and rent loss, meaning the tenant is not paying or they're in default, you're doing an eviction, or the property is vacant until you can actually get it rented, right? Let's talk a little bit more about how you minimize your risk, right? Because we're not going to just not only talk to you about the benefits and the risks, we talk about how we can minimize those risks. And one of the things is making sure that you do a thorough screening of the tenant. That's very important, especially considering you have the cream of the crop. Make sure that you're checking out their credit score, past rental history, nationwide eviction report, making sure that their income is normally 3 times or more what the rental amount is. And you want to make sure, excuse me, that you do a criminal background check so that you know exactly who you're renting to. Okay, so those are just basic things that you want to do up front, just so that way you can try to minimize the risk of getting a bad tenant in there or someone that'll tear up your property, right? Now, the other thing is it's very important that you make sure that you have a reputable builder, right? So a builder that got a reputation, has been building, that building out, because I know some investors may tend to say, you know what, I'm just going to go buy me some land and I'll get some land and then go pay some builder to build for them. But they don't really have a lot of, they haven't really did their homework and found out about the builder's reputation, seeing any of the work, or making sure that it's an experienced builder. And there have been builders that actually walk off with investors' money and never build the property. So it's very important that you go with a reputable builder. Now, the strategy that I'm speaking of is more so your builders like maybe a D.R. Horton, where we're talking about maybe a Ryland Homes, or a builder along those bases that's been around, that is actually building out a community of subdivision. Okay, those are the type of builders that I'm speaking of when I talk about the phase 1, the phase 2, phase 3, and 4, not the one where you go and get a custom build and have someone build it out for you and you buy your land. Now, the other thing that can help minimize your risk is, of course, hire a professional property manager to handle everything on your behalf. That way you can do what you do best. As I said before, go out, buy more property, and basically let that property manager run everything for you and make sure that they're maximizing the amount of rent that you can get, especially when you have a new construction and it's hard for you to figure out what those rents are. Usually the property manager can very well give you a very good gauge as to what's the maximum they can go out there and get. All right. So with that being said, is the new construction investment strategy for you? Or is it the long-term resale rentals? Or Airbnb or short term? All right. Now, not sure? That's okay, because our next video will be on fix and flips. And let's explore that and see maybe if that investment strategy is for you. So with that being said, that will conclude this session. Now, only thing I ask is that you please like, subscribe, and share this video with anybody you feel can benefit from it. And the other thing I want to just let everybody know is, I know there's a lot of talk about recession, right? The fact that we're in a recession, we're on our way to a recession, we'll be in a recession by the end of the year. My thing is, you should be putting your money in a bank, getting it all together, stacking your coins so that you can be in a position to purchase any event that we have a recession and home values start going down. You want to be in a position so that you're able to capitalize and build true wealth and get the house when the market is going down, right? In the bottom out. Okay. You don't want to buy necessarily at the top of the market, but there is a lot of forecasting and experts that believe the housing market, based on the increase in interest rates, the recession, and a lot of other things, that the housing market is going to start declining. And if that's the case, that means that this is going to be the best time for you to invest, will be when the market is actually declined and kind of at the bottom. Okay. So get your money together. Let's walk you through everything that you need to do so that you're in a proper position to be able to capitalize when the housing market goes down, in the event that it does. No one knows. Stay tuned. Have a blessed day. This concludes our session for today. If you're interested in investing in Georgia, please check out our website for all your real estate needs. Thanks for watching. All things real estate, money, money matters. All things real estate, money, money matters.